On today's hot sheet, I'm discussing Barbara Corcoran's view on housing's biggest problem. We'll share that. Bill Pulte's changes to Fannie Mae and Freddie Mac only within a week of taking over. Mortgage rates ahead of today's Fed decision and mortgage applications. Today is Wednesday, March 19th, 2025. I am Byron Lazine, and the hot sheet starts now. Welcome into the hot sheet here on Fed Decision Day. This afternoon, the Fed will make their final decision on what the federal funds rate is going to be. 99% chance, according to CME Group, that it will be unchanged. What we're looking for is those quarterly projections, the projections on how many cuts will be coming throughout this year, the projections on things like unemployment as the Fed sees it, and amongst other economic projections. Along with that, later today, the BAM team will be breaking down every word of Jerome Powell's prepared statements and the Q&A section. We'll be extracting all of that data this afternoon and sifting through the BS so that tomorrow morning, right here on the hot sheet, the only 24-hour look back on housing each and every single day, we'll be able to extract every conversation, question, prepared statement that Jerome Powell has about the housing market, how economic conditions might impact rates and housing. So we're going to break all of that down tomorrow. The best way to make sure that you don't miss it is to be subscribed here to the Now BAM YouTube channel. Hit subscribe and hit the notification bell. It's also the best way to support what we do at BAM for absolutely free. Go ahead and hit the subscribe and the notification bell. Let me know, obviously, in the live chat, as I see so many of you guys already doing, wherever you may be, which market you're tuning in live from today. All right. Barbara Corcoran is typically, either on the set of Shark Tank or, in her beautiful apartment in New York City or working with some of her business owners across the globe. But today we have some clips from her on a Fox Business segment talking about what the biggest problem is still facing the housing market. So let's listen to Barbara. Sometimes she has some very insightful views on the housing market and some that really are just more headline worthy. Let's see what she says right now is the biggest problem facing the housing market. And Haley, if you could, just kind of move us into that first segment here of the talk.
Excited to have Barbara Corcoran. She is founder of the Corcoran Group here with us today. Let's put up for everybody to see the average home prices since 2019 have just been going up and up and up, as you know. Is there some relief in sight?
Well, they're still going up. A lot of people are excited about the housing prices slowing down, but it's less than 0.25%, and that doesn't provide a lot of relief for people. What the real problem isn't interest rates. That's holding people back, of course, but more than 2/3 of America have 4% interest rates. Why would you sell your house? Why would you move if you have 4% rate? Mm-hmm. That's really the blanket holding.
So people are holding on.
Definitely.
And the market gets stagnant.
No, it doesn't get stagnant. Prices continue to go up. They've been going up 4-6% in the last 3 years.
But on transactions, it slows down. Scott Bessent, the new Treasury Secretary, he's always talking about, the Fed rate, okay? 30-year fixed mortgage rate right now, 6.67%, drifting a little lower. So what he talks about all the time is that the money's a little cheaper now than it used to be. Yeah. What's your take on that?
Well, I think the mortgage applications went up by 60% on refinancing. So people are finally thinking maybe rates won't really come down. But the biggest problem is it's just not enough housing to go around. Everybody wants a house and it's just not enough housing.
Okay. Pause it right there. So Scott Bessent, who is the Treasury Secretary that was mentioned there on the panel, he's been the Treasury Secretary for, I think he got confirmed about 7 weeks ago. He says the same thing that many people say. There's not enough housing to go around. In fact, he was recently interviewed and he was talking about some of the federal land that could help alleviate that problem. It's something that we've talked about here on the hot sheet a lot. Like, there's just not enough supply. I wish that they would start, and Barbara included, start correcting themselves a little bit. I mean, if you ask national home builders right now, is there enough supply? They're at 9 months of inventory. Okay. The problem is majority of the inventory is above where a consumer can actually get financing. It's above what a consumer can afford. Okay. Consumers are not making huge purchases right now. There's a lot of uncertainty in their economic condition. But more so than that, what we're seeing is the inventory that is available is really, that asset price has been inflated so much. I mean, they had on the screen there, in the 400,000 range right now for US home prices, right? And I don't know where Zillow gets their number that we looked at yesterday, because that is the number. It's in the 400,000s for US home prices. That when you look at that, that's not where a lot of the new inventory is. A lot of the new inventory is above that level. And certainly where a lot of the demand would be is like that 250 to 500. We see that more than half of the homes that sell are in that 250,000 to 500,000 range. We look at that number. I think that's Core Logic that puts that number out there, right? And so that's where the demand is. We don't have enough housing supply to meet where the demand for what people can afford is. And until we get to that place where we can start, reimagining how to bring inventory into why do people, fight over, why do investors fight over getting, another rental? Because they know that segment, that class, that lower end earner isn't going to be able to buy a house. And so they're going to be a renter forever. And so that's why investors are fighting over rents, because it's going to be very much unaffordable to buy a house if you're in that segment of the population. So it's not a blanket statement of dumping. If we dumped 1 million plus homes into the market, that's not really going to solve our problem. Now, it may make in those surrounding areas some older inventory less desirable, which reduces the price of it. There is this argument that even if you're bringing in a ton of inventory at the higher price point, that when that inventory turns, when somebody buys it, that older inventory is now going to go down in price. I'm not sure that I buy that all that much, because we've got 9+ months of inventory with builders. They can't move it. We looked yesterday at home builder confidence. It's in the toilet. They're sitting on 9+ months of inventory. They're cutting prices. They're 6 out of 10 homes have a builder incentive on it. They're trying to do things to be creative to get more purchases. And it's 9+ months of inventory. That's a buyer's market. Anything over 6 is an extreme buyer's market. All right, let's continue in here with the rest of this Barbara Corcoran segment. That is the biggest problem, because there's not enough housing to go. There's not enough affordable housing to go around. So a little bit of a long rant to just correct what Barbara and even our Treasury Secretary has said recently, and many others have said, that it's not a blanket inventory problem. Just go ask builders.
Thing, or is it just the market figuring things out?
It's a supply and demand. It's always been the same old thing over the years. That doesn't change. If you have too few houses, people pay more. And if they pay more, the housing prices continue to go up.
It's a huge reflection of the economy overall. I mean, what are you hearing out there? You talk to people every day.
From everyone that there's great uncertainty, and uncertainty is bad for business. Uncertainty makes people pause, which is a problem. The suppliers of homes in America, with 7 million homes short, are now hoarding lumber because they're afraid of the tariffs. A lot is going wrong, but the biggest tenet that's going wrong is people are uncertain. They don't know what to expect next. And when they're uncertain, people don't move forward.
When they're uncertain, just stop it right there, Haley. When they're uncertain, they also don't make big purchases. It's going to be something we're going to talk about here as we look at mortgage application data for this week. Yeah, I think mortgage application data should be higher than what we're going to see here, but it's not. But when there's uncertainty economically, especially in this time period right now where there's rapid change coming out of DC, when there's just uncertainty or got to wait and see a little bit how the change impacts and all of that kind of stuff, it stops people from making a big purchase, a major purchase. Housing obviously fitting into that category like no other. Let's continue here and finish off the rest of Corcoran's segment.
Anxious to buy a house and it's been difficult for that millennial age group, would you tell them to try to go for it or wait a little bit?
Go for it. And now there's a couple of hints I could give you, certainly, that make you in a better position to get a good deal. You can shop in the spring market when people are away for spring break. Houses are undersold in that week because nobody's around to sell those houses. You could also buy a fixer-upper, which people are afraid of, but financing on that is readily available, easy to get. And if you can fix a fixer-upper, you get a better house on a good block.
You fix a fixer-upper when you're young, and you can do it for a lifetime.
You're right. You do it once.
That's what. That's right. You do it once. You're right about that, Barbara. Listen, Los Angeles, you owned a home out there. Wall Street Journal headline: LA has big plans to rebuild after the fires. Good luck getting insurance. Writing new policies doesn't make sense at this time from the largest property insurer in California. You had a mobile home.
Yes, I did.
In Pacific Palisades.
And I lost it.
Lost it entirely,
fortunately, right? Well insured.
Okay, so with the view of the Pacific Ocean overlooking Malibu, this was your slice of heaven, you called it?
That was my slice of heaven, my girl house.
What do you think, Barbara, happens to that region of Los Angeles
I think everybody has rallied around the flag. Everyone I speak to says they're going to rebuild the house. I don't think it's a realistic expectation because housing prices have gone up with the tariffs, steel costs going up, and developers are having a hard time providing things for the same price. So I don't think my neighbors are aware that they're going to pay 20, 30% more to rebuild their house when they finally get approval.
What about the people that weren't as insured?
And it's going to take a long time. All right.
Didn't have
It's going to take extremely long. Anybody that's lived in, hurricane climates, the coast, southwest Florida, this, people that work in these markets know they've got clients that, talking 2-3 years before they get back into, waterfront home that has seen massive destruction. And even if you got the money, it takes time. So, no question about that. Going back to something else she said about timing of home shopping, spring break, when people are distracted. I think about this during, the winter, during holiday season. I think about this during, in the Sun Belt states in the summer, Arizona, like a market like Scottsdale, when people are, leaving Scottsdale, there's less people there in the summer. There's less people in, some of these coastal Florida locations in the summer. Those tend to be the time to go out shopping when there's not a lot of traffic. We saw builder traffic is down considerably right now. If it's a home shopper that can afford new construction, going in and looking at new construction, even if it's 5, 10, 15 minutes outside of that desired location, there's more ability to negotiate there. There's a stronger ability to negotiate when people have their eye off the ball. So there's a great point by Barbara. There's a lot of strategy, in this stuff. If you want to just shop when everybody else is shopping, then, you're just going to get what's available to you. Like there's no Black Friday instance on real estate. When everybody's at the house, you don't get the best deal. When everybody's at the house, you typically get the worst deal. Okay. There's a shakeup happening in FHFA. We have a new FHFA director now, Bill Pulte, obviously from the Pulte family, still on the board of Pulte National Home Builder. Hasn't been involved in day-to-day operations for some time. There's actually, I think he quite frankly hates a lot of the people on the board and the CEO, but still a major shareholder there. You can go back and look up the history of the Pulte company and some of the rifts there. He's at Pulte on X. Bill Pulte is, but he's already said a lot in a week. He photographed and videoed himself working through the weekend. Okay, so he's now got this government position. He claims that his father would be very proud of him and the work that he's doing and the position that the administration has granted him. He was working through the weekend. He's promising big change here. So here are some of the board changes at Fannie and Freddie Mac already. Okay, Fannie and Freddie Mac obviously in conversation to potentially be privatized once again. It's in conservatorship. there's a lot of benefits to going private. And, right now there might be a benefit of not going private immediately, which would be, if you go private immediately, is that going to, obviously there's more risk now on doing some of these mortgages. Would that push mortgage rates up? So the timing, and Bill Pulte's actually said this, the timing on anything, around that has to be done at the right time. Okay. You can't have a situation where you're taking something out of conservatorship, which has been in conservatorship for years, right now, just because it's the right long-term thing to do if it's going to bump rates up. Like I would not move it out of conservatorship right now if we knew rates are going to go back up over 7% for the remainder of the year. What that would do, to the, housing market, I think would be worse than just picking a date into the future. Okay. But there's going to be a lot more discussion around that and decision-making around that. All right. So Freddie Mac, there have been 6 board members removed. This is, I mentioned the board stuff with Pulte, with Bill Pulte, because, his conflicts with the Pulte board might be one of the ways he operates. Okay. And if we look at Freddie Mac, there are 6 board members that have already been removed, including board chair Lance Drummond and Jane Prokop. They both joined on January 7th. They're both gone. Bill Pulte appointed himself as chair and then added 3 others to the chair. Fannie Mae, 8 board members ousted at Fannie Mae. Put CEO Priscilla Almodovar, but CEO Priscilla Almodovar remains. Okay. So the shakeup on these boards is obviously like, hey, the regime of Freddie and Fannie, the board members they're no longer. So the vision is changing. The goals are changing. Okay. Both organizations right now are finalizing committee assignments. And so as those assignments take shape, we'll have a better understanding of what the goal here is. Now, Fannie and Freddie support around 50% of the U.S. mortgage market. That's why just pulling them out of conservatorship and going, privatized, which there's a lot of benefits to privatizing Fannie and Freddie, could impact rates significantly. 1 out of 2 U.S. mortgages are supported by Fannie or Freddie. Treasury Secretary Scott Bessent, to bring him up again, he links the exit from conservatorship to lower mortgage rates. So he actually sees it the other way that I do. I think that, when you have 1 out of 2, I agree with that long term. Obviously, once you privatize that for long term, I'm just talking about for the short term. If there's more risk on taking on 1 out of 2 mortgages, I see rates going up in the short term. Okay. Little secret here, just for my hot sheet people. The next 2 weeks, I'm going to be having major guests on Knowledge Brokers, both of which could speak to this topic and some of the other things that is happening in the mortgage industry, like buying up things like Redfin. Some major guests the next 2 weeks. Make sure you subscribe to Knowledge Brokers podcast, because I'll be asking this question: what happens when Fannie and Freddie go out of conservatorship? Do rates go up in the short term? These are going to be people that are going to be able to speak to this. One of the things you're already seeing with Bill Pulte, though, is a Doge-like energy to come in here and really shake up Fannie and Freddie. About 15,000 employees there. And Bill Pulte has some opinions already taking shape about maybe the effort that is being put into FHFA. Let's listen to the new director himself. If Haley, if you've got that clip of Bill Pulte, there it is.
One of the things that we discovered pretty quickly was there was about 2,900 people that were supposed to work in the building. Turns out only 49 were showing up full time on a 5-day.
No, slow it down. 2,900 people. How many showed up?
On average, the highest that we saw on a 5-day work week was 49 people. And this would be at Fannie Mae. And Freddie Mac has a similar problem. We're going to fix it. President Trump hired a businessman to do this, and we're going to fix it. One of the
So you can see already one of the emphasis is, do we need all these employees. That's going to be something that's going to be in the conversation. Do we need to bring people back into office we have the offices? You clearly see that, it's not a furniture problem. There's plenty of furniture. It's like 49 out of, the odds in a real estate office are better. What's 49? What'd they say? 2,900, 2,500? I'll just go with the lower number, 2,500. That's 1%. That's almost, 1%, about 1% to almost 2%, 1.9% of office use. I find in a real estate office, it's about 10%, maybe 20. In some offices, like 10 to 20% of the agents will use a particular office. These are W-2 employees. Agents are 1099s. They're working out of their car. They're working out of, the home office. They're working in a client's, dining room. They're working at an open house. They're working in the coffee shop, right? They're working all over the place. Here they've got the offices. They've got these are W-2s, and it's less than 2% of people are using the office on a full-time basis. So you can see where the new director is going. Doesn't mean that we know exactly what's going to happen. Here are some of the things. These are available in the Hot Sheet show notes. BAMX members, you can grab that. Just go to the Hot Sheet classroom. It's all on the bottom. It's exactly how we make the cake here on this show. Stricter loan oversight. So Fannie Mae is tightening oversight on multifamily mortgage fraud. Now, one of the things about stricter loan oversight, this is some of the strictest loan oversight we've seen. So going even stricter, it just means, quite frankly, less people are going to be able to qualify for a loan. There's been a lot of denials. Okay. Not a lot of denials happening on people that want to obtain financing for a home right now. Loans with higher than actual occupancy rates at purchase, appraisals not aligning with historical records, broker prepared financial statements. And so Pulte has not addressed the issue of loan buybacks on the single family sector. All right. So here's some NAR responses on this. Okay. NAR has said, statement following Pulte's confirmation. They have, and we have an article on this as well on BAM, nowbam.com. So you can take a look at that here, and we'll just go to it here really quickly. National Association of Realtors obviously has signaled their intent to work closely with Pulte. They want to ensure a stable and accessible housing finance system. Thank you for stating the obvious. On behalf of NAR, the chief advocacy officer, Shannon McGain, said that she wants to extend the sincere congrats to Bill Pulte in confirmation. His leadership comes at a pivotal time. We face historic housing challenges, including affordability and nationwide housing shortage. That housing shortage, of course, would be backed in the affordable section. NAR's key priorities are ensuring continued mortgage capital flow. Okay. Supporting sustainable home ownership, addressing the nationwide housing shortage. Okay. Here's a letter addressed to Senator Tim Scott, who's the chair of Banking, Housing, Urban Affairs Committee, and also Senator Elizabeth Warren, who's the ranking member of the committee. Okay. They included the following statement in a recent media interview. Mr. Pulte acknowledged the work that needs to be done at a local level. A lot of this stuff has to be done at local to reduce costs and other impediments to make more homes available for purchase. He also noted that the strength of the U.S. housing market is the current mortgage system. I'll come back to that because I'll give you an analogy here on that, where people actually think that the current mortgage system is propping up home prices. NAR looks forward to working with him on these initiatives to others to fix some of the most pressing issues in the housing and mortgage finance. So one of the things about our mortgage system, and this is why getting a mortgage, even at 7%, is such a great deal in comparison to other countries. It's 30-year fixed. A lot of countries don't have that. But one of the things that, having this government-backed mortgage system has done is certainly made the purchases of homes more accessible to more people. That's a good thing, the American dream. It's also put a lot of people's financial assets, like a lot of their portfolio. If you look at somebody's net worth, a lot of their net worth can end up in their home. Okay. And so that creates an environment through the ease of getting a mortgage. I know it's more difficult than probably it's ever been with, some of the policies around being able to obtain a mortgage, but the ease it is if you have, the finances figured out, you get the mortgage, you get the house, that is actually potentially propping up home prices, right? Because people have a lot of their net worth in. Mortgages are helping support more of these deals, and it's keeping prices high. People that have a lot of their net worth inside of their home don't have any incentive to see, home prices go down. So one way to look at it, but the strength of the U.S. housing market is in fact, tied to, the mortgage, market very much. We saw that obviously during 2008 to 2012 to 2014, that whole 5-6 year recovery after the great financial crisis. It couldn't be more evident that it was all about, that the housing market was all tied up in mortgages. Hopefully we're not as tied up there, but we still are to, to some degree. So more to come on this. We're talking about 1 week in, what changes will be made. There's already been some, some comments around 15,000 employees going in and looking at these offices, 49 people out of 2,900 people. And, Bill Pulte has said that's a waste of taxpayer money. So you can clearly see where some of the attention is being paid early on. It's a big, initiative from the administration to reduce spending from, government spending, reduce not only employee count, but contractor count that supports, a lot of this stuff. So we'll see what impacts that's going to have on housing and how they move forward. Speaking of mortgages, obviously is a big issue that we're going to continue to cover right now. When we look at this week in particular, mortgage rates are remaining stable, even with dim outlooks economically here in this week, while we lead up to today's decision from the Fed. The Fed's going to make their decision, and this is where rates are ahead of this Fed meeting here, just over, the last, call it 6 months, 7-8 months here. And you see even just this week alone, the rates haven't had much fluctuation, right? We saw the rates move up to begin the year, but generally speaking here, these rates have been, kind of averaging where we're at right now, about 6 3/4. So the Fed is obviously going to stand pat. This is, there's not going to be a lot of surprises. It's more about what we're looking for in the commentary and, kind of how they're going to project the future. This is one of those meetings where we get those, those quarterly projections and how many rate cuts we're going to see in the future. We had a projection that we would get, additional cuts this year, maybe 2 or 3. And so we'll take a look at that dot plot rather, and what the expectations for rate cuts in the future. That's going to be coming directly from, the Fed, the board here on the Fed. So one of the things obviously that we're going to be looking for what they speak about is, this recession fears that are rising. There's a lot of, commentary on, too much change too soon. And, listen, I think it's so hard when you're trying to cut prices. Even when you look at it in your own business, you look at your own P&L and it's like, we got to make cuts here in the business. Okay. I've done a ton of this looking at the business, both businesses, the last couple of years. Is like, where can we be efficient? And you're going down the P&L. It's like, wow, that's a big line item, but like she has a family. Like that means cutting a human potentially, or, we've had this relationship for years with this vendor and they do a great job. And they've got a business, and like you start to, look at everything, and you can sometimes look at it through that lens. And I think right now it's just hard. People are trying to make decisions, and it's a lot easier to just keep, printing money. It's a lot easier to keep, spending money that quite frankly, we don't have. Like if you were to say to a drug addict, like, hey, do you want to take one more hit today, or do you want to, going to rehab today. They're going to say, let's go into rehab tomorrow. I'll take one more hit. Like, it's a lot easier to kick the can down the road. So recession fears are rising because everything that's going on is uncomfortable. What we'll be looking for tomorrow is to see, obviously, what the Fed is going to say about the recession. Okay. Now, we'll have that information tomorrow morning. Make sure you're subscribed. Make sure the notification bell so we can get you involved in that. All right. Let's take a look at mortgage applications now here for this particular week. Rates haven't moved all that much. They've ticked up a little bit, but headline mortgage applications did decrease 6.2% from 1 week earlier, according to Mortgage Banker Association. That 6.2% was driven a lot by refinances, which decreased 13% from the previous week. The seasonally adjusted purchase index increased 0.1% from 1 week earlier. Okay, so that's what we want to focus on. We saw a little bit of an improvement there on the purchase index, mostly flat, mostly moving sideways. That is 6% higher than the same week 1 year ago. So to me, that's where you pull the positivity out of, this particular, report, that increase that we've seen over the last week. Not big, but it is the, the first time in 9 weeks that we've actually seen, a weekly increase on mortgage rates. The 30-year fixed rate rising to 6.72% on average, and that increase led to this decrease in refinance volume. So refinance driving it the most there. Here is, still we're looking at kind of low levels on mortgage application demand since 1995, the lowest levels that we've seen. So we're still hovering around that mark that we've been here for really the better part, of a couple of years now since the rates started to go up. Again, one of the things that they say here from Mortgage Banker Association is that people are just, holding off with some of this uncertainty on big mega purchases. So, some of the stuff that we talked about earlier, and that's putting pressure on how many buyers obviously are going to be out there in the market as we are in the, within 5 hours now of that Fed decision. We have a 10-year that hasn't moved all that much. It's at 4.3. This is still hovering around the low level of the last 30 days and certainly of the last 3 months. So 4.3 on the 10-year, 6.78 yesterday was the daily read on Mortgage News Daily for the 30-year fix. Tomorrow morning, we will uncover it all, what the Fed says, what decision is made, and that'll be live 9:30 on the East Coast, 6:30 on the West. It's the only show in our industry that gives you a 24-hour look back on housing every day that the markets are open, Monday through Thursday. Tomorrow is going to be that big Fed breakdown. We'll break it all down for you to get the most out of what we do here at BAM. Go over to school.com/BAMX. It's the best platform for training and community all in one place. And it's the place to get all of our, downloads from each and every single hot sheet, as well as the hot sheet show notes, all available for you inside of BAMX. School.com/BAMX to join the community today. All right, there you go for your hot sheet. We'll see you back here tomorrow morning. Until then, of course, toodaloo.